I want to highlight coming in for the hospital sector, and one specific company there is Fortis Healthcare. Let's keep an eye out on that. Now, the SEBI has granted an approval to IHH Healthcare to proceed with that mandatory takeover offer of 26% stake in Fortis Healthcare and Malar Hospital. This is following a 7-year delay. That was the major part, right? The 7-year delay that came in. Now, because of that, obviously, the rate at which the open offer was going to be taking place was different from what the current price of Fortis Healthcare is. Today, also look at it. Fortis Healthcare is holding on to gains of 6%. And this case was going on for a while, so much of a delay that we're seeing coming in here. Now, to talk to us more on this, what does this mean? Could there be furthermore any situations that could come in, or furthermore, one could go to the Supreme Court and say that, no, we still want to hold this. How does this work? What is the further outlook going forward from here on is what we're going to be understanding today. And to discuss that, we have Hetal Dalal, President and CEO of Institutional Investor Advisor Services, as well as Shriram Subramanian, founder and MD at InGovern. Hetal, as well as Mr. Subramanian, good afternoon. Thank you so much for joining us on the show. Hetal, let me start with you. This is such a big update that's come in, but there was a significant delay, 7-year delay. The price at which they wanted to go for the open offer was 170. Now today at 1,000. How does this merit in terms of clarity of pricing? Is there possibility that they could apply for new pricing? How does this go about? Or is there further legal recourse which could take place, which could lead to a further delay?
So good afternoon, everyone, and thank you for having me on the show. It is indeed unfortunate that it's taken 7 years for IHH to have to complete the open offer. And it's certainly costing them a lot more than it did at the time that they actually envisaged the transaction. In fact, I would argue that they are now paying for the value that they themselves have created in cleaning up the entire act and trying to get Fortis up and running, given the condition that the company was in at the time of this particular transaction taking place. I don't know, honestly, even if they do get a sort of exception and say that they're going to go back to that price, if the open offer will be successful, because today shareholders will tender only when the price is right. Given that they currently own about 31% of the equity, going to above 50% will certainly be their goal. And therefore, I think while it is indeed unfortunate in terms of the price movement for IHH specifically, they've been very focused on getting that controlling interest in Fortis. And to that extent, it's also good for Fortis that there is this whole overhang which has now gone away. Once the open offer closes, IHH is very specifically in control with a more than 50% shareholding. And therefore, from the perspective of the company itself, I think this is a good sort of development.
But what a lost opportunity for IHH, right? Because, I mean, they wanted a lot more of the stake of the company. And because of, like you said, the value that they have themselves created, they're forced to pay a lot more for that or offer a lot more for that. And they're not sure of getting, tendered in at a higher price as well, even if there is an exception. But let's ask Shriram. Shriram, because of the kind of, interest that there is from the PEs, etc., in the hospital space right now in India, and after the kind of value creation that we've seen for whatever little stake that IHH had, do you think that, they can go ahead and sell it to some of the PEs, given the sort of interest, instead of taking more stake right now with an open offer and all of that, just exit the 30% that they have? Or do you think it'll be prudent for them to continue to hold on?
Good afternoon. I would think the hospital sector in India and the healthcare sector is still a long way to go in India. If you see the coverage in tier 2, tier 3 towns, even in tier 1 town, cities, etc., the coverage of corporate hospitals is still, the market share is 30-40% only. So I would think there's a long way. The India healthcare opportunity is very big. So I would think IHH, being a strategic investor, will continue to stick there. I don't think they will want to sell to any financial investor or so. And coming back, our choice of words is also very important. See, it is not that IHH, this is a mandatory open offer. So even 7 years ago, it was a mandatory open offer. So one doesn't even know, even at that time, whether shareholders would have tendered to the 170 rupees. Even to this day, it is a mandatory open offer. SEBI, because it is not the fault of the company that it had been dragged to court and the SEBI had put the approval on hold. So from that perspective, it will launch a mandatory open offer at 170 rupees. It's not, obviously no shareholder is going to tender now that the stock price has run up beyond 1,000. So I think IHH will just continue to hold its 31% shareholding, and it is in control of the business. There is no compulsion to sell off. The growth rates and the future for healthcare in India is positive. So it will be status quo from that perspective.
Right. So, Hetal, what happens now? It was a mandatory open offer. It just becomes a legal formality now. How does it change things for the business of the company? I mean, it's been doing well so far, no problems, and now added benefits coming in from the hospital, for the regulators, also for the hospital space. Do you think this becomes a non-issue now and it's business as usual?
It's been business as usual for a while. I think the only thing that really changes is that because the company was under this continuous open offer for almost 7 years, they had to come to shareholders for approval for every small sort of transaction they want to undertake. I think that the compliance and burden sort of goes away now once the open offer gets completed, and therefore sort of reduces to that extent, some of the shareholder approvals that the company will need to seek. But that's more sort of operational issue and a compliance sort of cost issue. I think business has been good. The company is under IHH control. The question is, will they move to a 50% equity or not, which gives them dominant control? And that gets driven, as Shriram rightly says, by the current price and whether they want to up their investments and actually pay for what they've been able to create. It's not a non-issue. I wouldn't say it's a non-issue per se. I think that open offer will help them increase equity, and that's always helpful. And I think to that extent, we'll have to wait and watch in terms of what the price is. See, today the price has not been announced by IHH. Now, ICDR pricing will of course apply, and therefore it will have close to market price unless they get an exception. But if they're really intent on increasing their equity, they will have to give a price which is going to be attractive to shareholders, and that's going to be interesting to see.
Absolutely. A price that is going to be attractive to shareholders will be key, right? Because then that will be a deciding factor as well. Mr. Subramanian, from an institutional investor point of view, if I'm looking at it, what does it mean for them? Because there will be large shareholders there. How should they be viewing this scenario? And, in terms of any pressing or, information that they should furthermore focus on, given that there could be a revaluation in terms of prices, how should they look at it?
No, as Hetal said, only this open offer overhang is gone. So it's a positive for the company, and institutional investor, however they would have viewed it before October 1st is how they will view it now. I mean, healthcare sector is booming. In fact, the free float of the company, because IHH owns only 31%, means that there is 69% free float. So from that perspective, it is fairly amenable for institutional investors to build up huge equity and sell off whenever they want to, etc. There is a lot more liquidity out there. So from that perspective, it's a very positive for the company.
All right, hold on to your thoughts, Hetal and Shriram. We'll just come back to you in a moment. Meanwhile, important updates at the bottom of your screen. This is with regards to the AGR case for Vodafone Idea, which was then in the Supreme Court. What we get from our colleague Ashmit is that the hearing has been adjourned and postponed to August 13th, or rather will happen on the August 13th right now.
August 13th?
October 13th. I apologize. October 13th, as the government has sought more time. It was deferred the earlier time as well, brought to October 6th, and now moves on to October 13th as the government has sought more time, and which is why we're seeing the stock come off once again from the highs of trade. Remember, this morning there was a news coming in from Bloomberg that the government was perhaps mulling a one-time settlement to improve ties with the UK. On the back of that, there was a spike from the lows on the counter. But then again, the fact that there has been a deferral in this case itself all the way up to the next week is something that, has the street a little less more aligned on any direction. And some of those longs are currently coming off. We'll get Ashmit for more details on this one. But for now, what we have is that there has been a deferral and the stock is off the highs. Let's get back to our conversation. Shriram, the other big positive that has happened is that the regulators, the government has actually gone ahead and revised rates for, the hospitals that the governments would be clients for after 14 years. How big a positive do you think this is for the space, and which ones would you believe would benefit? Because while government is decent enough business for some of the hospitals, the question is there's also a lot of working capital that goes because there are low margins or maybe payment delays.
Yeah, I mean, obviously, this is a big issue, even with the Ayushman Bharat kind of a scheme where hospitals have a lot of receivables from government. So the private hospital chains which are listed are largely defocusing on the government as this one, though it's a regulatory mandate, only they deal with cases that come to them. They don't go in search of those cases. So from that perspective, I think it's neutral for all the listed, though many stocks have run up, including Max, Fortis, etc. Fortis probably because of this open offer approval, but other, as you show on your screen, Max, Narayana, all stocks have run up 3-4% today, but Aster, DM, etc. But I think it's a neutral from a perspective of government, I would say revenues and focus, etc. Those are not revenue and margin drivers for the hospital chains.
Absolutely, interesting take there. So Hetal as well as Mr. Subramanian, thank you so much for joining us this afternoon, explaining us about Fortis, what it means in terms of pricing, what we're keeping an eye out on. So thank you so much for that. But